Let me just check after hours. I'm not sure where.
I'm on it right now, brother. Woo! Big news today. Big news today. Wall
This
Street
looks like
Journal.
a sorry sack of shit. Let me tell you.
Big news today. Hertz top positional advisor for bankruptcy preparations. They're really their only hope right now is to get bought out or get bailed out.
This is the thing I don't actually know about bankruptcy. So they sell off obviously assets to pay their debtors, but then are they still listed? Are they still a company? Do you still own the stock? What's up with that?
It
Even if
says
it's
here, when a
worth.
publicly listed company declares bankruptcy and goes into liquidation, the company's shareholders may be entitled to a proportion depending on what type. However, the stock itself is worthless and cannot be sold.
I should know this better because back in the .com days, but I was more in college. I was day trading. I didn't know much. I was day trading because it was like, oh, it's easy to make money because everything's going up in .com before
Right,
it blew up, right?
right.
And some of my companies blew up. I'm like, where are those companies? I don't even see the tickers in my in my
Oh, yeah, yeah.
portfolio.
Oh, yeah, they're gone.
Those tickers are long gone. So I guess that's what happens. They take away your stock and then they take away the ticker. You
They
know?
just get rid of the ticker. Yeah.
So first they take the money, then
Yep.
they take the
And then
stock, and then they take the
see it
ticker.
there at 0.000.
It'd
So
be nice to see the ticker there that says, you zero,
at
something
least,
to remind
yeah,
me.
right. Like hanging it on the wall, wall of fame, wall of shame.
No, hold on, let me
This is
close
when it
this.
started.
Okay.
These private investors bought Hertz in 2005. This is the same shit that happened at Toys R Us. They came
Oh,
in, bought them
wait.
in.
They bought this in 2005? Okay.
Look at the year of the article,
Oh, I
September
see.
10th,
September 9th.
2005.
Yeah.
Right. So these venture capitalists came in, bought the company, loaded it up with a bunch of debt, and then just basically let it die. Took the profits and ran. And apparently that's what happened with Toys R Us.
The nation's largest rental car company to a consortium of private investors for about $15 billion. So now that these guys ran up the debt, you're saying it's the same guys that are basically now.
I'm not saying it's the same exact dudes, but it's the same strategy. It's one of the ways that that venture capitalists essentially bankrupt companies. Because apparently with Hertz, what they did was they got rid of the employee pensions, essentially. Just got rid of the pensions. That became their money, which put them into a tremendous amount of debt. And then you have a company that was basically gutted out, that was like, upside down, and could not stand 2 months of no income.
So what's going on? And right now, basically, Hertz is just declaring that they may go through bankruptcy. No one's actually offering to buy them out right now.
No one's offered to buy them out. Apparently, they had hired some new financial advisor to try to talk them through, trying to manage or move around the debt. I think a lot of it is like just missed lease payments, because I don't even think they own the vehicles. So it's all just like lease payments on land.
Ah.
You understand? Like, think about all the locations.
Well,
So
the
it's like,
land and the vehicles too, right?
well, yeah, if they're leases, if they're not owning any of them, it's a lot of payments that they have to make every month. It's a lot of overhead, just to
Right.
have the fleet sitting there.
What's amazing to me that all these businesses, they literally cannot be it. Like 1 month goes down, it's like almost all of them are fucked. It's like crazy.
But there really was no incentive. I mean, if you think about it, the way that our society was set up, there was no incentive for those companies to have huge
Right.
amounts of money sitting in the back, because if they did that, the fact that they're not buying their own stock back or using it to amplify their stock price would be seen as poor strategy.
Right. And all those companies that held, like right now, let's talk about Berkshire for a minute because this relates to it. Everyone was like, why are you holding $128 billion in cash? Dude, why don't you invest it in the S&P? Well, this is why, motherfuckers. Like,
Well, because
when
it's
the
just
shit hits the
hard.
fan.
Yeah, you got money sitting there. You got money.
Yeah, because then now he's like, all right, now I can wait till an actual bottom. I think that's what he's doing. He's not buying anything.
You won't buy anything.
Warren Buffett.
You won't buy anything. You won't buy anything till like next year, because you really won't see the effect.
Maybe if the other bottom comes in the next couple of months, if there is a bottom, it'll probably happen, let's say August.
It takes a while for these ripple effects
Right.
to happen. Real estate is where a lot of people's secondary investment income goes. Like after you've got a little bit of a stock portfolio, you got some. What's the next thing you want to do? You want to buy some property, right? If that starts to go away, that's one class of people's investment, but that's also how another set of people find their housing. So you got the, you know what I'm saying? They start overlapping in a way where if that person can't buy houses, then rents go up and it becomes crazy.
What seems to go on, this is just a discussion about the economy, but it seems that the middle class is being sort of diluted and maybe not murdered completely, but half of them are being sort of just murdered where they're not going to be able to afford their own houses, right? So only the very few will be able to actually buy property, own land, and everybody else will be a renter,
Well, essentially,
which is terrible, which is
it's a
terrible.
knife's edge. It's a knife's edge. You're either going to become poor or you're gonna make it. That's it.
That's what it looks like, right?
You know what I
Like,
mean?
and it seems like they're cutting out the middle class in half because
Or
where do
just
all
cutting it
these,
out. Yeah.
at least in half, like the upper middle class will hopefully survive, it looks like, because they have some money saved, they have some assets, they have some property already, so they have enough cushion on those other things that actually make some passive income, right? Everybody else, it's basically being destroyed. That's what it feels like. Let's say you have a couple of properties, right? And we own real estate, so we can discuss this. This affects us in terms of, oh, we can't pay. But anyone in a better position who's actually a millionaire and a billionaire, if their tenants can't pay for a couple of months, they can absorb that cost, get rid of them. It might take them a while, get rid of them, get some new tenants in, continue the
Yeah.
evolution, and buy my property for cheaper because they can afford to absorb that whole issue. That's what I mean. It's on a knife edge, just like you
What you're
said.
basically saying is, look, because the bills come on a regular basis, time is on their side. Okay,
Right,
because they can absorb many more months with no
right.
income. So time is on their side. Time is on the side of people like Warren Buffett. And for guys like you and me, there's a window where we can operate and make moves. But at a certain point, you're just out of moves. You get checkmated. And I think as it goes further and further, people are getting checkmated.
You
That's
know
it.
what you're saying is like beautiful. We should put that on our poster. But
Yeah.
no, that was beautiful. That yes, basically we have a window that before we're completely wrecked.
Exactly. And
That
you can offset it by making certain moves, but at a certain point, it's not sustainable. If you never
no,
make
no, no, no,
income
no.
again, you're fucked. Like you've got to really make some serious moves. So all these things, we'll find out in 6 months or not whether or not this is like the equivalent of rearranging the chairs on the Titanic. You know what I mean? It's like,
Right.
what is the point? It's going down.
Back to the Uber discussion. It's just rearranging chairs.
Yeah, you know what I mean? That's basically what you're doing. It's like it's going down. But like, you know, we're gonna see. I just think that there's levels to it. I think that there's levels to it, and I also think that we're not in a position, even with past experiences, to fully know what the impact is
No,
going
no,
to
no, we're not. But okay, what's important as we are doing, we know the rich. We're not there yet, but we know the rich stay invested. We know they own assets. They own stocks, real estate, gold. Like we know this. This is not a secret anymore, right? And people who don't own any of these things that we are discussing on a daily basis now, that's a big mistake.
Yes, if you don't have any of those things, this is the time to buy. The only difference between a rich person and like a middle class person is that the middle class person has to consider selling. They have to think about the value of that to them should they need the capital. The reason
Right.
why rich people are fine in these times is because all they do is buy. They buy
Right.
products cheap, they buy investments cheap. They don't sell anything. And they
Right.
just go
You
up and
don't sell assets if
they
you're
don't sell
smart.
anything. But the difference is if you need to sell any, or not even need to sell, if you can't afford to lose some of the assets, or you might need to sell them, the greater that need is, the more volatile this market is to you. Hertz is an example of a company that we're just coming now to find out how poorly they were being managed, that they were essentially upside down. They were just kind of treading water for years.
The reason Hertz is not going to succeed, and a lot of other companies that are like old, basically the old timers in the group, is that they're not innovative. You can still be a car company and innovative. You can be a rental car company and innovate and do different things, but none of these companies are innovative. There's no reason for them to exist, and as soon as anything bad happens, it's over.